Good morning, traders. It is 8:01 a.m. Chicago time on Thursday, the 5th of January, 2023. Thanks for joining me this morning on episode number 2386. Morning is referring to where I am. I understand that you may be in the evening, at night, so I'm not narrow-minded in thinking the universe revolves around Chicago. It does not, but good morning anyway. This is episode number 2386. Derivatives trading is not suitable for all investors. Past performance is not clearly not indicative of future results. This thing is not operating properly. Stand by for a second. All right, here we are. Sorry I had to pause there. The computer decided to change the screens on me. Here we are in the conversion trading pre-market summary sheet this morning. We're looking at a market that is really mixed, um, and not much really to process. One of the key elements that we saw in the overnight session is the ADP report. The ADP employment change came in at 815, and it came out at 235,000 jobs versus 150,000 expected. This is uh, this is kind of a precursor or kind of indicator for the unemployment report, which comes out tomorrow. So NFP is tomorrow. I'm sure you all heard, if you look at your charts at about 8:15 a.m. Eastern U.S. time, 7:15 Chicago, you'll see a pretty decent drop. That was ADP coming in strong, which of course is contrary to what the Fed wants to what the Fed wants to see, and uh, and so with that, we need to pay attention to tomorrow's non-farm payrolls. Amazon's cutting 18,000 jobs minimum. Salesforce is cutting 10% of its workforce, or about 7,000 employees. Um, and that's what's on deck. We had bounce trade out of Canada this morning, nothing really significant. Bounce trade out of the U.S. came in better at a $61.5 billion deficit versus $73 billion expected. Import export numbers and initial claims came in at 204,000 versus 225 expected. Remember, initial claims and continuing claims, the lower, the more pressure there is. The lower, the more pressure there is on the Fed. So 204,000 versus 225,000, slightly better. Jobless claims 4-week average 213,000, quite a bit lower than the 228 expected. And continuing claims came in at 1.694 million versus 1.708 million. Again, more pressure on the Fed. This morning we get Fed's Bostic at 920. We get the global composite PMI and services PMI at 945. These are not high tier numbers. And then because of the holiday on Monday, we get crude oil inventories out of the EIA as well as the gas inventories. I believe we get the gas, yeah, the natural gas inventory. So crude oil inventories at 11, gas inventories at 10:30. Gas has been just ripping down, as I talked about. Bullard at 120, and then this evening, Japan has the Jibon Bank Services PMI number at 7:30 p.m. for those who trade the Asian session. The S&P is in a multi-distribution profile this morning. Is there a problem with the sound? Slight pop and scratch. Okay, thank you for letting me know. We strive for absolutely fantastic quality on this broadcast. So what we'll do is reduce the mic gain, and it should be better. If there's popping, then we'll reduce. There we go. So should be slightly better, a little lower. Yeah, this is kind of my backup mic. It's a Bluetooth headset versus the Rode Studio mic that I normally use, which crashed on me at the beginning of the broadcast. So we still have problems with this PC here. The S&P is in a multi-distribution profile this morning. Multi-distribution means that there's quite a bit of price discovery, and so we need to be aware that even though the overnight session was completely engulfed by within yesterday's session, day RTH session, um, and then and yesterday was completely inside of Tuesday's session. We have a fair amount of volume this morning and pretty decent range. I'm expecting a fair amount of activity given the market situation now. Inventory is 56% short, 56% short, 40 points of range so far. And again, we don't have anything really earth-shattering coming out today. Interesting moves in copper. Copper, if you recall, is a very, very, very important industrial metal. It's needed in construction, electronics, auto, airplane, whatever. Anything, anywhere needs copper. So it's a, sort of an indicator. The demand or the pricing of copper is sort of an indicator of a sort of a macro indicator, a weak one, but still keep an eye on that copper popping up almost 2% this morning. We could see, we might see news that follows on that, but it's interesting to know. Earnings, Walgreens this morning came in at $1.16 versus $1.13 and 33.38 billion in Q1. And yeah, it beat its estimated revenue and EPS. Let's take a look at what was expected yesterday versus what we got. Yesterday, if you were here, the primary expectation is we would gyrate at the open, push higher. Then I was expecting it to break down, and I was looking for it to get back down to 38.46. That's the gap to settle trade, Porsche GTS. um, Gap to settle trade, and then the alternative is we push higher, and that would be a break away from where we've been and another attempt at 38.80. Here's what actually happened yesterday. We look at how the market opened sideways. Look at it. It opens, dips down, puts in a really clear opening swing low, swings higher, okay, to the 38.80 on the nose, and then it pushes down to the 46. So we did a scenario 2 check, then scenario 1 check, both of them yesterday, and then it swung again all the way through, breaking the IB high and then drifting back down before closing right around the 38.60, where balance is. Balance, remember, for this whole area, and we've been in balance for a while. Balance is between 38.55 and 38.60. Here it is. Take a look at it. Here's the TPO balance, and look at yesterday. Yesterday, right in that balance. So guess what we're going to do? And you probably know by now. We're going to merge this one left and incorporate it into this composite, because again, it overlaps a composite. And what we have to take away from this particular chart here is that we're getting a more and more and more prominent compressed profile here. As the amount of trading that occurs in this area continues to advance, there's a higher and higher probability of imbalance out of here. So this is a bit of a warning that this is very mature. This profile is incredibly mature. And of course, we have non-farm payroll tomorrow, which could really tip us. But it's actually spelled kurtosis, Curtosis. This is a statistical term. Look it up, very important. Kurtosis describes the level of sharpness in a histogram, and we have a very sharp one at the moment. And so again, this speaks to the fact that we have quite a bit of maturity here. Others will call this coiling. So if we look at TPO chart, look at this thing. It's been coiling in this range for quite a bit. And this is after selling off. So to anyone who is zooming out, looking over the last few weeks, this looks like a bear flag and it's likely to break lower. It's a question of time. But because I can't tell the future, uh, I don't know which way it's likely to break, and I'm not going to impose some pattern on the market. So this is another way of saying coiling, compressing, consolidating. The fact is, it's just an incredible amount of balance, and we've got quite a bit of buildup in this area. So this, you just need to be aware that one of these days we are likely to come in and we're likely to have an open drive. Could happen overnight, could happen on the open. We're likely to have an open drive, and it's a trade you'll want to get on because it'll likely run quite a ways because there's so much compression happening in this zone. Again, here it is in the TPO detail. There, for every contract that has been bought, there was a seller. There is no inventory or float in futures. Every position has two parties. So somebody's likely to be wrong, and there are a lot of somebodies that are likely to be wrong. So once this thing runs, it's likely to run quite a ways. And as I talked about yesterday, 39.90 is your big target above. And then down below, we have 37.50 all the way down to 36.50 as key targets below. We can cover this area, this distance in a very short period of time. So this is what we're looking at. Those are the key elements that we're looking at here. Here's the S&P looking at the volume profile, same story, multi-distribution profile yesterday. Oop, too far. Multi-distribution profile yesterday, multi-distribution profile in the overnight session today, both inside of each other, more coiling. And again, you want to be very aware. You want to have a way to detect that the market's breaking away, and you want to make sure that you're not fading that breakaway when it happens. The NASDAQ has the same kind of scenario. Very thin profile back here, price discovery. Yesterday was price discovery. The overnight session completely balanced. This thing is winding up pretty good. So the NASDAQ seeing the same kind of scenario. Here's the NASDAQ on a composite basis. Yet again, we're trading between those levels that I talked about, 11,054 down to 10,890. This area here continues to see compression, and we're going to merge that to the left, and you can see that it's becoming more and more prominent. So at some point, this will be very prominent, like in the S&P, and it's likely to break. And when it does, again, a warning, when it does, it's likely to run quite a way. So if you're in the NASDAQ, you're likely to see a big move here in the coming days. What are we doing now in the S&P? Look at what we've done in the overnight session. We've pushed to that 3880 stock zone. This is a stock zone right here, just as this one is a stock zone. We pushed to the 3880 stock zone again. We sold off. Here's your ADP news, and then it's been selling and selling and selling. So today I'm leaning short. We're leaving VWAP mid above us. We're moving away from settlement. We're not consolidating. The market has not found a base yet. We have a weak low on the overnight low at 45 and a quarter. So I'm going to be looking to sell pullbacks. The key area I'm watching is right here. This is this is kind of the early line in the sand. It's at 38.55, 38.55, 55, 57. And again, this will be your MC point of control on TPOs, 3860 in volume. So this entire area up here between 55 and 60 is key to watch and is in play this morning. So any movement up to it, I'm going to monitor for weakness on the buy side, and I'm going to be looking to sell and targeting that 45, 42, then yesterday's low at 36.50 for a run to 38.20 below. That's the primary scenario. So the primary scenario is a push lower to 38.20. Not going to do the colors because I'm being lazy. The alternative is it opens, pokes through, is unable to squeeze down into yesterday's low. We get an impulse up, and then we consolidate at the 55 to 60, hold here for a while before breaking through, and then we have a gap to settle trade. I will not get involved with a gap to settle trade unless I see the 55 to 60 area not only get breached but hold on the pullback, and then I'm keen to get long into the 74 settlement price, and that'll be our gap to settle setup. Again, we're really consolidated. I don't want you to miss the forest for the trees. We're really consolidating, and a move out of here is likely to push quite a bit. The relative delta is relatively weak this morning, no pun intended, is relatively weak this morning. It came from negative, it went flat, and it's negative again. And look at the participation today for the first time for the year, for the last 2 days. We've got good participation on the short side by the large lots. So again, leaning short on that side. If you're in crude, incredibly interesting. Crude breaks the 77. It did so on Tuesday. It broke the 77. Very, very significant level. And so it moved from the upper distribution to this lower distribution, broke the 77 and was unable to be responsive. So crude was targeting immediately 74.15 yesterday, then 73, and now we're looking at most likely 70 being tested in crude. 70 crude looks like it is likely to test the low. What crude looks like is an impulse pullback continuation that consolidated that we would expect to reverse, but instead has dropped. So look for 72. If 72 holds, we have a higher low, and then crude can now turn up into 82 to correct the weak structure above, but it's doing what I said a couple days ago or yesterday, a lot of weak structure, and there it is. It's filling in that weak structure below. So pay attention to crude in the sense that it may put in a higher low and start to rotate up. Your key figure in crude is right up here. If it fills the gap, then shorts are likely to get squeezed right back to balance in the 78 area. If not, then the 70 is very vulnerable at this point. Okay, good luck. I'll catch you tomorrow. Take care.